Welcome you all to the Learn to Trade 365 platform. So, yesterday we have done a Twitter space session with Chart Mojo team, techniques to find breakout trades. So, first of all, let's see what are all the key takeaway, key learnings from the yesterday's Twitter space. And one more thing, all the content, whichever the key takeaway, I have done a list. If you could see here, all is completely shared by the Chart Mojo team and especially Sunil sir. Okay, I am just making it as a summarize, a key takeaway, important points which was discussed, and with the chart example I am trying to showcase here. Okay, so first of all, when it comes to breakout trading, he has shared with us five different breakout style. So the number one is the all-time high breakout. Number two is the 52-week high breakout. Number three, moving average breakout. Number four is the VCP, volatility constraint break pattern breakout, and number five is the direct box. So now we will go one by one in understanding what is those breakouts with few chart examples which were shared by the Chart Mojo team. So first of all, let's start with the all-time sorry all-time high breakout. So in all-time high breakout, what are all the basic points which need to be checked? First, make sure to check higher rise formation because we are looking at an upside breakout potential because all time high tells us an upside breakout potential. So check for higher high formation. Number two, find stocks which are consolidating at all time high before breakout. So now what is mean by consolidating? Yes, let me complete and I will show you with the chart examples. Third, consolidation before a breakout. Generally, what it does is it removes weaker hand traders from entering the stocks or who are part of the stock. They get frustrated and or their patience get tested and they are automatically getting removed from the stock. So let's take an example, two example which was shared. One is the first one is Pix transmission and second one is Monte Carlo. So first check what is this is a chart of Monte Carlo on a daily time frame chart. So this is all about the stock is trading at all time high somewhere near 52-week high and all time high. Both the concept comes into a same category. What does the consolidation mean? This is called as consolidation. The consolidation which is sideways option which is getting developed near the 52-week high or an all-time high. Here the 52-week and all-time high got triggered. After that clear consolidation, now price is trying to make an again a breakout. So this consolidation, if you see generally during the consolidation phase, the volumes, now check in terms of volume during the consolidation phase, in general the volumes becomes slightly lower, and very important when we are looking at this consolidation, all-time high consolidation and a breakout, the volume plays an important role when price is making a breakout from this consolidation phase. So here we are getting a decent volume spike. So volume, make sure to remember not only all-time high or 52-week high price is consolidation, giving a consolidation, all the breakouts will clearly work out. Important here is once the price coming out of the consolidation, breaking a further new 52-week high, breaking a further new all-time high, during mainly give importance to the breakout candle volumes. So one more example is Trix transmission. This is on a weekly time frame chart. The last example was on a daily time frame, so now this is on a weekly time frame chart. Again, price is making an all-time high, 52-week high coming into play. After that, price is again clearly going into a consolidation phase. Now we are getting a new breakout which is coming out of the consolidation phase. And volumes, need to check the volumes are slowly steadily trying to rise with a clear continuous steady volume. Here to make an add-on in the consolidation as discussed from Sunil sir, who is part of Chart Mojo team, he has also mentioned during the consolidation pattern, phase, after stock trading near hitting a 50 DV high or an all-time high during the consolidation phase, look for a continuous pattern. So now here let me add on what is mean by a continuous pattern. Continuous pattern is all about a few patterns which has been shared, that is ascending triangle, rectangle or a box pattern. Okay, there are many patterns, but two major patterns which was discussed on the yesterday's Twitter space was ascending triangle and the rectangle and box pattern. So as per that, if we check, price is trying to consolidate, and are we getting a kind of an ascending triangle pattern formation during the consolidation phase? This puts more add-on. Generally, during a consolidation near 50 degree or near all-time high, more the chances there will be a formation of continuous pattern, that is ascending triangle or a box pattern or a rectangle pattern. Okay, so now moving on for the further examples, further, just a minute. Okay, so now same scenario for the 50 dB guy breakout, the second type. Again, need to check the consolidation before breakout, and during the consolidation phase, we will or we can find any chart pattern or a continuous pattern. When, as I mentioned, the chart patterns, the continuous patterns like ascending triangle, rectangle, box pattern. Why we are looking at this? Because pattern creates conviction, a confidence or a confirmation, or we can say develops conviction to focus on and taking those trades. So now moving on to the third type, that is moving average breakout. So there are generally, before going on to moving average breakout, there are generally two patterns which forms, that is continuous pattern and a reversal pattern. Now for the moving average breakout, we will discuss about reversal pattern. Let's take a quick example. A stock is moving down. Okay, moving stock is moving down, getting a decent correction. Let's say 20-25% correction from a 50 DB high or from a all-time high. Now to confirm the reversal pattern, we need to check two things, that is double or triple bottom formation plus price crossing its 20 and 50 DEMA moving average is always a plus sign. So let's check quickly an example. Example is Balram Porcini. Here if we check, this is the 52 week high, or we can say an all-time high, which got tagged here. From that zone, from around 400, price almost came to 300 mark. That is almost 20-25 percentage of stock got corrected. So after that, what is the reversal pattern telling us? An example which I have told in terms of moving average breakout from all-time high, price getting corrected 20-25% from the all-time high levels and forming a reversal pattern. So now what is mean by reversal pattern? All this was again explained by the chart motor team and from Sunil sir. So what is the reversal pattern here? So reversal pattern is all about we are getting double, triple bottom, rounding bottom pattern, etc. There are many patterns, but I am the many examples was shared based on this two three patterns, that is double or triple bottom and a rounding bottom pattern. So now in Balram Puchini, as we are in the example, are we getting a triple bottom here after 50 from the 52 week high after correcting 20-25%? Here we can see we are trying to, the chart is giving us an triple bottom formation. Chart is giving us an triple bottom formation, and here I have added two moving average. One is 50-day moving average and the second one is the 20-day moving average. So now here the condition is, after the correction, after double or triple bottom or the rounding bottom formation, price has to cross above the 50 and 20 DEMA moving average. So here price is somewhere here clearly crossing the 50 and 20 DEMA moving average, plus to make it as an addition, check the volumes. when the price is trying to cross 50 and 20 demo moving average after a double or triple bottom formation for an additional confirmation, here the volumes is also spiking up, and again a good sign, because once the volume spike up, it is telling us the more sorry, chances are more of smart money trying to participate in the stock rally, or we are again in the same trend of the stock. So here the broader trend of the stock is bullish and upside trend. So here we are finding a reversal pattern as discussed by the chart mojo team and from Sunil sir, plus price crossing 20 and 50 DEMA moving average. On an additional note, if the volumes is also spiking up, it is an additional confirmation. More the confirmation we have, we will get more clarity. It will give us more conviction. And to precisely make a more add on here, we are getting what? A triple bottom formation with a box pattern. Because during the consolidation phase, identifying a pattern is also giving us an additional clue. This is a takeaway which I have got from the yesterday's Twitter space. So everything I am trying to combine and showcase you with the help of different chart examples. Okay, so quickly moving on to the next, that is VCP pattern. So straight away chart examples of so many so many ceramics, Rajesh export. So in this pattern, generally first what happens, the patterns develop skew formation to remove weaker end. So what is mean by skew formation, I will explain you. After that we need to check the volume, that is strong volume during a VCP breakout means more chance, more the probability that the smart money are participating. And if the volumes are lagging during a VCP breakout, it generally tells us that more sorry, retail traders are trying to participate. So let's take an example. Sorry, so many ceramics. Let's take an example. So what does mean by first VCP pattern? VCP pattern generally looks like this and a breakout. Like this is a low formation, higher low, further higher low formation. Generally, VCP pattern, I personally follow the pattern. I personally look at three things, three base formation, one, two, three. Minimum, I look for a three base formation and then a breakout. So same thing, it's coming up in this chart. Look at this, a low formation here, higher low formation here, and a zone here. So it's like a wave like this. Okay, so somewhere this is a resistance hurdle here, so breakout of this in a stock with, if the stock is giving us a breakout with volumes, that will be a spike up in volume and additional confirmation. The volumes are lagging, a clear straightforward statement that the more participants of this breakout is from the retail traders, because to be precise and to be frank and to be honest, without volume price can't aggressively move up or aggressively move down. This is again from my experience and from yesterday's Twitter space. So volume is important. So this is all about VCP pattern. Okay, this is a low formation, higher low, and then further squeeze. You could see the zones are getting squeezed out. This zone is bigger, it's becoming smaller, and it becoming further smaller. So this is called as squeeze with higher low formation. Moving on to the last one, that is Darvig's box pattern. So this is generally a formation of rectangle and a box pattern. Basically rectangle and box pattern is a continuous pattern. In the last example which I have shown you about this Balrampur Chini's example, that is this box pattern. Okay, so generally a box pattern is a continuous pattern. Here we have got the box pattern during a reversal. Not only box pattern, double triple bottom formation. If you check, if we are checking this chart of so many ceramics, here you could see price is clearly trying to move up, a clear uptrending formation, After that, price going into a consolidation phase, developing a box pattern, trying to break out, developing a box pattern, and a clear cut breakout. So this, as the discussion is going on, as we are mentioning here that the continuous pattern, that is box pattern or rectangle pattern, is a continuous pattern. This is an uptrending stock. We are forming a box pattern. Breakout is on the direction of the trend. Again a consolidation, again a box pattern, again breakout in the direction of the trend. So continuous pattern or a box pattern, what and how it helps us in an uptrending stock, consolidation, creating a box pattern, and again trying to break out. So it is giving a chance to follow and go take position in favor of trend or join the trend of the stock, in this case an uptrending move. Just it is helping us to join the trend, be with the trend and join the trend, because I'm not telling we would have cashed the stock as 160 and we could have square off that 720. Definitely no. No one can cash the top and bottom. Is as we are looking this uptrending auction behavior, in an uptrending generally pattern forms. You could see a triangle pattern formation here, consolidation pattern, a box pattern formation here, box pattern formation here. Generally during a stock trending up, we will find continuous pattern, that is ascending triangle, box pattern. So as per your trading style, you can give importance to the patterns of continuous pattern if you want to go with the trend of the stock. One more important thing which was shared was find stock which is closer to 52-week or an all-time high in a range of 5% or 10%. So what is mean by this? So let's say this is all-time high or 52-week high, or any case 52-week high. So here finding stock from the 52-week high, it is near to the 52-week high in a range of 5 to 10%. Focus on those stocks. Here again the rules is straightforward and rule is same. Look for consolidation before breakout. Once we find the stock, we need to look for consolidation before breakout. Check volumes on the breakout. Good volume, it is better. Identify continuous pattern during those consolidation phase. There are different examples. Let's take few examples. That is Astral, Power Grid, Timken, Dani Enterprises. Let's take few examples here. So if we check here, checking this example, the stock is trading this somewhere 52-week high formation. So what we need from the 52-week high range, 5%. That is somewhere around 2,400 is the stock level. So from that zone, 5% which is coming around 5 to 10%, which is coming around 230, 240 points from the high. So somewhere here 2100 which is coming in for a 5 to 10% range from the high. So here what we are looking at is to identify a continuous pattern. First rule number one is consolidation. Consolidation to get developed. So price is getting a consolidation here with what? Triple bottom formation with a box pattern formation. So now when the stock is making a breakout, so this is somewhere here price is making a clear cut breakout, but still the candle is not so strongly closing above the breakout, but volumes have already started spiking up. This is what all about looking a stock which is trading near to the 52-week high, 5 to 10% range near to the 52-week high. So one more example when it comes to the reversal pattern which was shared, a stock name called Nazara. So here from the 52-week high, price almost got a correction of 20-25%. After that, what we need to check on a reversal pattern, formation of double top, double bottom, triple bottom, or a rounding bottom pattern. So here we are getting a triple bottom formation plus stock has to cross, after a double bottom formation, stock has to cross 20 and 50-day moving average. So it is now trying to cross 20 and 50-day moving average, but still the volume has not spiked up. For an additional confirmation, we are looking at volumes have not spiked up, but this is giving a reversal sign as per the concept so far which we have discussed in terms of a reversal pattern. So at last but not the least, so here a key takeaway, five patterns which we have discussed, and in that continuous chart patterns are ascending triangle and rectangle, box pattern, reversal pattern or double or triple bottom or rounding bottom formation. So here at last, develop an habit to cut your losses earlier and ride the winning trades. It is more important in all form of trading styles, especially on a breakout trades, because there are many breakout which ends up being a failure breakout. So if you are identifying a clue, getting a clue of failure breakout, cut your losses immediately, and once you are in the profitable stage, just ride the winning trades. Okay, always develop an exit strategy based on your trading style, and simple rule, ride the winning trade until you get your exit strategy triggered. At last, this is very important, profit should not be a reason to exit trades. So this statement is not, I have not uh, got this statement. This statement I want to give a credit to a Twitter handle called Trend My Friend. Okay, a Twitter handle name. Let me search this Twitter handle. Yes, this is the Twitter handle. Trend My Friends. So from this Twitter handle, I came to know about this very important statement. Profit should not be a reason to exit the trade. We have to make sure to ride the winning trade. Okay, unless until our exit strategy doesn't trigger. I believe you'd have liked this video, the content. I'm just make a summarize, a key takeaway which I have done from the yesterday's Twitter space, which was done by the Chat Mojo team, hosted by Learn to Trade platform. Thank you so much. Keep supporting us, keep learning, and